why does alternative minimum tax exist? Joseph Ball, 59, United States Secretary of the Treasury, made headlines when he told Congress that 155 high-income households did not pay any federal income taxes in 1966. American taxpayers were furious and AMT was created into law by the end of 1969. AMT was designed to prevent taxpayers from using tax law loopholes to avoid paying their fair share of taxes. What is the alternative minimum tax, AMT? The alternative minimum tax is a parallel tax system from the regular federal income tax. When you input your data into the tax software runs your tax liability on the regular federal income tax table and the alternative minimum tax table. Your tax liability will be the higher of the two tax tables. For example, if the tax software says you owe $50,000 on the regular federal income tax table and $40,000 on the alternative minimum tax table, your total tax liability is $50,000. If the tax software says you owe $50,000 on the regular federal income tax table and $70,000 on the alternative minimum tax table, your total tax liability is $70,000. Regular federal income tax liabilities of $50,000 plus AMT liability of $70,000 minus regular federal income tax liability of $50,000 equal $70,000. Technically, that is how we calculate the total tax liability. But for simplicity, it is easier to understand when we say we pay the total tax liability of the higher two tax table. Thus, alternative minimum tax only applies when our alternative minimum tax liability exceeds our regular federal income tax liability. With the current law, most households are not subject to AMT because of the large AMT exemption. How to calculate alternative minimum tax? If you really want to calculate your alternative minimum tax, you will need a tax software and know what items are included and excluded in the calculation. It is very complex if you want to do it right. Form 6251 can guide you on how you can calculate your AMT. I will give you a high-level overview of how to calculate alternative minimum tax. 1. We start with our taxable income, which is on our Form 1040, line 15. 2. We add back our standard deduction or certain itemized deductions, such as deduction for state and local taxes, personal exemptions, home equity mortgage interest, percentage of medical expenses, employee business expenses, and other miscellaneous deduction. 3. We also have to add back certain items, such as investment interest, net operating losses, the bargain element on incentive stock options if the stock is not sold within the same calendar year from exercise, tax-exempt interest from private activity bonds, foreign tax credits, passive income and losses, net operating loss deduction. You can get a full list on the IRS website, and these items could change, so always talk to a qualified tax professional for your unique financial situation. 4. This will give us our alternative minimum tax income, AMTI. 5. The alternative minimum tax income minus the AMT exemptions if we are not phased out of the exemption equals our minimum tax base. 6. The minimum tax base multiplied by the AMT rates equals the tentative AMT. 7. The tentative AMT minus the regular income tax on taxable income equals our alternative minimum tax. How to calculate alternative minimum tax income, AMTI. Regular taxable income plus positive AMT adjustments minus negative AMT adjustment plus tax preferences equal AMTI. How to calculate alternative minimum tax, AMT. AMTI minus AMT exemption equal minimum tax base, TAM AMT rates equal tentative AMT minus regular income tax on taxable income equal AMT. You will have a better understanding of the calculation when we go over some examples later in the video. What is a alternative minimum tax exemption? A alternative minimum tax exemption is a alternative minimum tax income offset. For example, if you are single and your AMTI is $70,000 and the AMT exemption for a single taxpayer is $73,600 for 2021. You do not have an AMT liability because $70,000 minus $73,600 is a negative number. If your AMTI is $80,000, $80,000 minus $73,600 equals $6,400. $6,400 is your minimum tax base. Then you multiply $6,400 by the AMT rate to get the tentative AMT liability. Although you are subject to AMT, it doesn't mean you have to pay AMT liability, because you have to pay the higher amount of the regular income tax liability or the AMT liability. AMT is a parallel tax system of the regular federal income tax. If you owe $100,000 under the regular federal income tax and $120,000 under the AMT, you pay $100,000 for regular income tax and the $20,000 is for the AMT. Thanks to Congress, the AMT exemptions amounts are automatically adjusted with it. What are the 2021 AMT exemption amounts? The 2021 AMT exemption amounts are: unmarried individuals other than surviving spouses is $73,600. Joint returns of surviving spouses is $114,600. Married individual filing separate returns is $7,300. Estate and trust are $25,700. In general, what does phaseout mean? Every year, the IRS publishes phaseout. When your modified adjusted gross income or adjusted gross income exceeds a certain phaseout, the tax deductions or tax credits get reduced until you get no tax deduction or tax credit. In regards to alternative minimum tax, the 2021 AMT exemption begin to phase out and completely phase out are: filing status unmarried individuals other than surviving spouse begin to phase out at $523,600, completely phase out at $818,000. Filing status joint returns or surviving spouse begin to phase out at $1,047,200, completely phase out at $1,505,600. Filing status married individual filing separate returns begins to phase out at $523,600, completely phase out at $752,800. Filing status estate and trust begins to phase out at $85,650, completely phase out at $188,450. The alternative minimum tax exemptions phase out. 25 cents disappear from your exemptions for every $1 above the phase out. I like to teach by providing an example, so let's look at a single taxpayer. For 2021, Luna is a single taxpayer. The AMT exemption is $73,600 and begins to phase out at $523,600. She has an alternative minimum tax income of $600,000 for 2021. This example will give Luna some AMT exemption, but not all. $600,000 minus $523,600 equal $76,400. $76,400 divided by 4 equal $19,100. $19,100 minus AMT exemption of $72,600 equal AMT exemption of $54,500. AMTI of $600,000 minus AMT exemption of $54,500 equal minimum tax base of $545,500. Why you should not go over the annual alternative minimum tax income phase-out amount. The alternative minimum tax exemption can reduce to zero for high income earners. Let's do another example by assuming Luna has an alternative minimum tax income of $818,000 for 2021. $818,000 minus $523,600 equal $294,400. $294,400 divided by 4 equals $73,600. $73,600 minus AMT exemption of $73,600 equal AMT exemption of 0. We deduct Luna AMTI of $818,000 from $523,600, because that is the amount the phase out begin. We divided by 4 because 25 cents disappear for every $1 above the phase out. Thus, Luna will not receive a AMT exemption because her alternative minimum tax income is too high. She is completely phased out. Let's take it another step further by adding the tax rate to get the tentative AMT liability. $199,900 times 26% equals $51,974. 818,000 minus $199,900 times 28% equals $173,068. $51,974 plus $173,068 equal $225,042. $225,042 is the tentative AMT liability. What are the alternative minimum tax rates for 2021? For 2021, the 26% tax rate applied to AMTI up to unmarried individual other than surviving spouse is $199,900. Joint returns of surviving spouse is $199,900. Married individual filing separate return is $99,950. Estates and trust is $199,900. For 2021, the 28% tax rate applies to AMTI over unmarried individual other than surviving spouse is $199,900. Joint returns of surviving spouse is $199,900. Married individual filing separate return is $99,950. Estates and trust is $199,900. Let's go over some examples. The IRS has examples on their website. I'm going to make a little changes for easy understanding and to be up to date. The AMT exemption amount for 2018 is $109,400 for married filing jointly, which is shown on page 10 on the IRS website. In 2018, Mr. and Mrs. Luna have an alternative minimum tax base of $312,000. What is their alternative minimum tax? The wrong way to solve this problem is $312,000 times 26% equals $81,120, or $312,000 times 28% equals $87,360. The correct way to solve this problem is $191,500, the 2018 AMT limit for 26% tax rate, times 26% equals $49,790. $312,000 minus $191,500 times 28% equal $33,740. $49,790 plus $33,740 equals $83,530. What happens to the 2018 AMT exemptions of $109,400? The AMTI minus the AMT exemption equal the minimum tax base. The minimum tax base times the AMT rate equals the tentative alternative minimum tax. Thus, the AMT exemption was calculated to get the minimum tax base. What did we learn? The AMT rates work like the regular federal income tax rates. They are both on a progressive tax system. The AMT exemption amount for 2021 is $114,600 for married filing jointly taxpayer. In 2021, Mr. and Mrs. Luna have a minimum tax base of $312,000. What is their tentative alternative minimum tax? The 2021 AMT rate of 28% applies to the excess of $199,900 for married filing jointly taxpayer. $199,900 2021 AMT limit for 26% tax rate times 26% equals $51,974. $312,000 minus $199,900 times 28% equal $31,388. $51,974 plus $31,388 equal $83,362. In 2021, Mr. and Mrs. Luna have a alternative minimum tax income of $312,000. What is their tentative alternative minimum tax? The alternative minimum tax income of $312,000 minus the 2021 AMT exemption amount of $114,600 for verifying jointly taxpayers equal the minimum tax base of $197,400. The $197,400 is below the 2021 AMT rate of 28% applied to the excess of $199,900 for married filing jointly taxpayer. The minimum tax base of $197,400 times the AMT rate of 26% equals the tentative AMT of $51,324. AMTI of $312,000 minus AMT exemptions of $114,600 equal minimum tax base of $197,400 times AMT rate of 26% equal tentative AMT of $51,324. Luna is a single taxpayer for 2021 with a taxable income of $50,000 and a positive AMT adjustment of $5,000 for AMT purposes. Her regular income tax liability is $13,800. What is Luna total tax liability? How to calculate alternative minimum tax income, AMTI. Regular taxable income of $50,000 plus positive AMT adjustment of $5,000 equal AMTI of $55,000. AMTI of $55,000 is less than the AMT exemption of $73,600. Thus, Luna total tax liability is her regular income tax liability of $13,800. Luna is a single taxpayer for 2021 with a taxable income of $100,000 and a positive AMTI adjustment of $65,000 for AMT purpose. Her regular income tax liability is $13,800. What is Luna total tax liability? How to calculate alternative minimum tax income, AMTI. Regular taxable income of $100,000 plus positive AMT adjustment of $65,000 equals AMTI of $165,000. How to calculate alternative minimum tax, AMT. AMTI of $165,000 minus AMT exemption of $73,600 equal minimum tax base of $91,400 times AMT rate of 26% equal tentative AMT of $23,764 minus regular income tax liability of $13,800 equal AMT of $9,964. Luna total taxable liability is $23,764. What happens when you exercise incentive stock options, ISOs? When you exercise ISOs with after-tax dollars, when you exercise ISOs and did not sell the employer stock within the same calendar year, the bargain element is a positive AMT adjustment. Other positive AMT adjustments are the standard deductions or certain itemized deductions, such as state and local income taxes and property taxes. You can visit the IRS website to get the full list of positive AMT adjustment. You can start by visiting IRS Form 6251 to learn more. When you sell the stock, the difference between the sale price and the exercise price is a long-term capital gain if it is a qualifying disposition. That amount is a negative AMT adjustment. If you exercise the ISO and then sell the employer stock within the same calendar year, you don't have to worry about AMT because the difference between the sale price and the exercise price is taxed at ordinary income tax rates. If this sounds confusing to you, I recommend you watch my video on what you need to know about incentive stock options, ISO. You need to know how ISO work and the terms used relates to ISO. Form 6251. Form 6251 gives us a lot of intelligence. If we want to pay the least amount of overall taxes, we need to understand Form 6251 because it gives us a list of items that are included in the AMT calculation to get to our AMTI. From line 2A to line 3, you want to know if the item is a positive AMT adjustment, negative AMT adjustment, or tax preference item. Once you figure that out, you want to know if it is a deferral item or an exclusion item. AMT credit. When we exercise ISO and pay AMT on the bargain element, the difference between the exercise price and the fair market value, what happens to the tax payment? The tax payment is an AMT credit and may be used against regular tax in the future years. Am I eligible for a tax credit? If you are not liable for AMT this year, but you pay AMT in one or more previous years, you may be eligible to take a special minimum tax credit against your regular tax this year. If eligible, you should complete and attach Form 8801 credit for prior year minimum tax individual, state, and trust to claim the minimum tax credit. Here is what Form 8801 looks like. Here are the instructions for Form 8801. This is from Quizlet. A taxpayer is paying alternative minimum tax this year. The AMT is primarily due to timing difference, resulting in the creation of a minimum tax credit. The taxpayer will apply the minimum tax credit against a future year's regular tax liability when regular tax exceeds the tentative minimum tax. A AMT credit can be carried forward into future years until it is exhausted. A AMT credit cannot be carried backwards for previous years. You may not use all of your AMT credit, or it will take a very long time to get all of your AMT credit to offset your regular tax. Using AMT credit. After a taxpayer has paid AMT, a credit is allowed against regular tax in future years for the amount of AMT. The credit for individual is generally limited to the amount of the AMT generated by deferred item, for example, exercising of incentive stock options, as opposed to exclusion item, for example, state and local taxes. This credit is limited so that regular tax is not reduced below AMT for the year. What did we learn? AMT credit can offset regular tax when the regular tax is greater than AMT. Another way to say this is AMT credit can offset regular tax when we are not subject to AMT. Once we know we can use the AMT credit to offset the regular tax, there is a limit on how much AMT credit we can use because the regular tax liability cannot be below the AMT liability. That is why qualified tax professionals say it takes a very long time to use all of the AMT credit from a large AMT payment from exercise ISO. Why do you get taxed on the bargain element if you are subject to AMT? The IRS assumes you will make a profit when you sell the stock. Thus, they want you to prepay the tax even though you did not sell the stock. I am currently not subject to AMT liability. How do I know if I am subject to AMT liability when I exercise my ISO? You can use the estimated tax calculator, then minus $10,000 to $20,000 from the estimated bargain element to be on the safe side, or ask a tax professional to run the numbers for you. Another option you can do is to exercise a field ISO this year and see if you are subject to AMT. If you are not subject to AMT after you exercise your ISO, ask your tax professional how much bargain element can I have next year before I am subject to AMT. From there, minus $10,000 to $20,000 to be on the safe side. If you have to pay AMT liability this year, you only pay a small amount because you only exercised a field ISO last year. Thus, using up all the AMT credit is easier than having a large amount of AMT credit because you exercise a lot of ISO. You should know that calculating AMT is complex, and you are only subject to AMT if your AMT liability is higher than your regular tax liability. Understanding the relationship between alternative minimum tax and incentive stock option. If we want to understand alternative minimum tax, we need to understand Form 6251 line by line. We are not going to go over Form 6251 line by line, but we can talk about the relationship between Form 6251 and incentive stock option. I like to teach by providing examples, and TurboTax has really good examples on their website. So we are going to look at them together. We exercise 100 incentive stock options at $3 per share, and the stock is trading at $33 per share. The fair market value of the stock is $33 minus exercise price of $3 times 100 ISOs equal $3,000 is the bargain element. On Form 6251, line 15 is the bargain element of $3,000. The exercise price of $3 per share times 100 ISOs equal $300 is the cost basis in the stock for regular tax purposes. The fair market value of $33 per share times 100 ISOs equal $3,300 is the cost basis in the stock for alternative minimum tax purposes. You have two cost bases in the stock. If you are not subject to AMT, that means you did not pay AMT on the bargain element, your cost basis is $3 per share. When you later sell the stock, you pay taxes on the difference between the cost basis, which is $3 per share, and the sale price. If you are subject to AMT and pay AMT on the bargain element, your cost basis is $30 per share. When you later sell the stock, gain or losses is based on the cost basis of $33 per share and the sale price. There is an exception to this rule where if you sell the stock within the same calendar year, the difference will be taxed at ordinary income tax rates. Avoiding AMT. If we want to avoid AMT, all we need to do is exercise the ISOs and sell it within the same calendar year. For example, we exercise the ISOs at $3 per share and the stock fair market value is $33 per share. A couple of months later, the stock price decreased to $20 per share and we sold the stock at $20 per share. Because we exercised the ISOs and sold the stock within the same calendar year, we pay tax on $17 per share, $20 minus $3 at ordinary income tax rates. The stock fair market value at exercise is irrelevant because we exercised the ISOs and sold the stock within the same calendar year. Does California have AMT? Yes, I live in California and California has alternative minimum tax purposes. You can visit www.ftb.ca.gov to learn more about California AMT rates. Because we cannot deduct state and local taxes under AMT, investors who live in the states that have high income tax rates are more likely to be subject to AMT compared to investors who live in states that have low income tax rates. AMT and incentive stock options in non-public companies. Before investors exercise their ISOs in non-public companies, they need to know how their ISO work, the tax liability, and the risk associated with non-public company stock. To avoid AMT, the investor can exercise the ISOs and sell them within the same calendar year. But the two biggest obstacles are tradable and available to trade. Tradable. Is there a market for the stock to be traded after the investor exercises the ISO? Available to trade. Are there lock-up periods where the investor exercises the ISO but cannot sell them because they are in a lock-up period? We know that the bargain element is subject to AMT. The IRS will calculate the employer stock fair market value based on the information the companies provided to the IRS. If the investor exercised the ISOs and had to pay AMT, they should be aware of many risks. The risk the stock price will decrease. The risk they cannot sell the employer stock because they are in a long lockup period or other restrictions. They also should consider the opportunity cost of the AMT payment. Instead of using their after-tax dollars to exercise the ISO, they could use that money to invest in a diversified portfolio. Please note that this material is for educational use only. Tax law are complex. There are exceptions to the rules, and it is constantly changing, so don't do it alone. Be sure to talk to a qualified professional before making an informed decision. I hope you enjoyed this video, and thank you for watching. This is Tan, your trusted advisor.